Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, May the 18th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together to take a look at market, macro to micro, take a look at the structure of the market, and then we drill down to our targets, our trade levels, and our hypotheses for the day. This is Fed Day. FOMC minutes come out today. Plus we got crude, so we could see some early action and then sideways until the Fed, and hopefully volatility will pick up then. This is a subscription room, so if you're interested in checking us out, I'll put up the contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, contact information is quantumleapfutures@gmail.com or Skype Doug_McKay. I'll be the one from Windsor, Ontario, Canada. There is no website. There's no blog. This is not a commercial venture. We do everything here live in a go-to, and then we do live trading and analysis during the course of the trading day. If you like this video, there's a couple of years up on YouTube. You can take a look at past performance. If you like what I do, follow me on Twitter @crazy2. Okay, so yesterday we opened auction in range after a trend day. So we were looking for a rotational day, and we basically had that all day until Lockhart and Williams, both of the Fed, hinted at the possibility of a rate increase, and then we flushed down, took out that naked VPOC down at 2042.50 and came down, tested the 38 level, put in a new low below that 38.50 that we were watching, and basically chopped around into the close. We created the double distribution. We do have a couple singles above us at 47 and 51, clear double distribution. Now, overnight, things were pretty much trading inside the lower distribution of the prior day, and we just went down now and tested the RTH low at 36.75, putting in a new low at 36.25. So we are seeing some weakness. This is the largest rotation of the night, 850, getting a little bit of a bounce here. But if we break this 36.25, look for 35 to be tested, and 35 to 34 is that liquidity level, and if that doesn't hold, our key line in the sand at 32, which is the microcomposite value area low, and we could see further weakness down into that 27-25 area. But let's not get ahead of ourselves. Let's first take a look at the news. Like I said, no real news this morning until we get to crude. Crude inventory at 10:30, and then the big one would be FOMC. So I'm expecting a move on crude inventories and a move on FOMC. But other than that, I'm expecting a rotational day leading up into that. Although this morning, with this weakness, could prove me wrong. Each morning I like to start my day with a basic candlestick chart with a 9 EMA and a 20 SMA. What I'm doing is I'm looking for slope and separation, the strength of the trend, and where the trend is being violated. And on the monthly, very strong trend. End of the year we challenged it. Beginning of the year we challenged it. We took it back. Now we're challenging it again, and we're sitting right on top of the 20 SMA right now. Anything below the 32 could see further weakness come down and test the 9 EMA, which is going to take out that target at 24.75. But so far, the trend is starting to get into this continuation pattern, but is struggling. On the weekly, we have come down, and we are testing below the 9 right now. We do have a naked cross down here on the weekly, down at 1983.25. There's also a head and shoulder pattern that is set up on the daily and on the 4-hour that takes us down to targets into the 1900, 1983, 1976 are the two numbers that come to mind right now. So, we had this strong parabolic move. They come back, close this technical gap, and now they're trading below the 9 right now on the weekly. So we are seeing the trend being challenged but not broken. On the daily, you can see this head and shoulder pattern, left shoulder, head, right shoulder, neckline. I'm using 32. Below that, we've got a measured move. And let's just look at the measured move quickly. Not exact, but give you an indication. We'll just take it down here to the 30 level. The 61 is at 1982. The 100% is 1952. We're in this area of undetermined fair value, and we're getting a lot of chop. This is very tough trading in this area right now because there's no real edge on the larger time frame. In terms of the trend, we are starting to get slope and separation to the downside, so we have a possible start of a trend down on the daily. On the intraday, you can see that we are getting this continuation pattern. We had a downward trend. They took it back yesterday on Tuesday, Monday. Oh, get my days straight. And then they rolled it over yesterday during the RTH session, and so far we've basically been chopping around, going sideways in the Globex, and we are seeing some slope and separation to the downside, and creating a weak low down here. Going to the 1 hour, strong slope and separation. They tried to take it back, failed at the 20, and now we're getting possible continuation down. Going to the 30-minute, same thing, strong trend down, consolidation, looks like continuation pattern is possible here. And then going to the 15-minute, same thing, downward trend, sideways consolidation through most of the Globex, now possible continuation pattern to the downside. And last but not least, the 5-minute, very strong trend, since this move down early in the morning. I was looking at this this one tick gap right here. These are usually filled, but this went down a lot further than I would have thought. We have just come up and closed a little bit of a technical gap. This 3850 is going to be a telling sign if we can get above it again, whether or not they'll run up into that 4050. That 4050 is the overall micro composite from this whole balance that we've been in. And let's go to that so we can take a look at the bigger picture. You can see that I've drawn a new profile that incorporates all the volume from March the 17th through to yesterday. You've got the microcomposite VPOC at 4050. This is right where it was in this this balance area right here, the overall balance area, and now we're coming back into it. This composite goes all the way back to 2013. Of course, we've been chopping around in this area of bluntness, this undetermined fair value centered around the 6150. The current microcomposite that runs from the April the 28th or 29th, I should say, through to yesterday, that VPOC is up at 53. And then the last 3 days, you can see value has come down, and it's down at the 42.50. So we walked our way back down to this 40.50. Now we're chopping around it. The key line in the sand still remains this this value area low, and you can see the longer term one, the one that I just drew, its value area is 31. So I'm going to shift the key line in the sand from 32 to 31 just because it incorporates a longer time frame. But pretty much this between 32 and 31 is our line in the sand. And any break below that, the main target below is going to be down here in the 24.75 with intermediate targets at 29 and 27. If we can hold this 32, I'm expecting a move back up and more chop in this area. I mean, this area really has no long-term edge. You can see how choppy it's been every time we've gotten in here. It's just been back and forth, back and forth, back and forth. Key levels to pay attention to above 40.50, 42.50, 45, 51. There's a 47 single and 53, 55, and 61.50. It's a real tough call right now. You got to watch your risk very tightly. We just put a new low in for the Globex. Our 20-day ATR is running at 23.20 off of the new low that we just put in at 20.36 and a quarter, 23.20. Our upside daily ATR targets now shifted down to 59.50. We had a pretty good, decent looking profile until this breakdown. We have created a new LVN here at 38, and that's basically 38.75. Basically just above the year open, and this might be a case of the bears trying to get us back below and hold us below the 37.75 year open coming into the Fed. The overnight VPOC is not likely to shift. It's up at 43.75, just inside of value, just below the close from yesterday's session. And that's about all the information. That our overnight high is 46.75. And we could put in a new low. We still have lots of time, so we could put a new low in. But right now it's at 36 and a quarter. If somebody sees it go lower while I'm talking, just let me know so I can adjust it. All right, so levels. Just take a quick look at flex levels right now. You can see that there's so much right here. We've got the low of April down in the 26 area. We've got non-farm payroll at the 30.50 area. Our key liquidity, from April is down here in that 34-35 area. Non-farm scene of the crime is right here. I mean, there's just so much going on here. It's really, really tough trading right now, and it has been. And if you've been struggling, don't worry about it. This is a tough market for everybody I've been talking to. So it's not you, it's the market. Okay, so let's put some levels in here. Obviously, a key level for us is going to be the 36 and a quarter. There's no real edge right here, so I have to move up into that LVN at 38.75 that we just created in the overnight, and use that rather than the low of RTH session. I mean, we're going to open up either just inside of range or just outside of range, but we're most likely going to open up outside of value. Let's do the lower numbers first. I'm going to move the key line in the sand down to 31. And there's no real edge right here, but there is the range low at 33.75. So I'm going to use that. And then below that, our targets get very clear. 29, there's a little bit of support at 27, but the next big target is 24.75. And our daily downside ATR target is off of the high overnight of 46.75 is down here at 23.50. So this is bringing this next big target into range today. Within our daily ATR. Below that, 21, 18, 17, and then our key support level, which is the microcomposite VPOC, going back to the last quarter of 2015. Our key support level is 16. Anything under 16, for me, it's all over for the upside for the time being, and we're going to dip ourselves back down into the 1980s and probably hit those measured moves from the head and shoulder pattern that's setting up on the daily and the 4-hour. So you got 16, 12.75, and then the next big level below is down here at that 06.75. And our weekly downside ATR target is at 06.25. So with 3 days to go, weakness coming in. If they do hint to more rate hikes, and we do get some weakness coming in, and we break that 16 level, nothing for us to get down here. We have weekly range to get down here into the 06 level, and I think that it could get rather ugly if that happens, and we'll see those 1900s. Above us, above the 38.75, obviously you want to look at a move back into the microcomposite VPOC at 40.50. The range low, the value area low is down here at 43. We've got a double distribution from yesterday with this LVN zone that basically runs from 46.50 up into the 51 with two singles on board. We've got the single at 47 and the single at 51. So this whole area becomes one great big huge LVN, which basically, if we get in it, I'd be looking for the 46, 75 and 47 to get taken out, the overnight high in the single, and a flush or a push up into the 51 and cover this whole area. And we're likely to chop inside of this back and forth as we fill in this unauctioned territory, because it also puts us back in this area between two key LVN or microcomposite LVNs at this 42.50 and this 53. So we're likely to chop around in this area. Above 51, we get into the upper distribution. I'd be looking for a move up into the 56.50 area, with definitely 53 as your main target. Then 56.50. And really, there's not a lot of edge up here. You got your daily ATR target and yesterday's open at 59.50. Really, the next level is going to be up at that 62.75, front running it to the composite VPOC, or the most traded price going back to the beginning of 2003 at 61.50. Above the 62.75, I would be looking for a target of 64.75. And then 68, 69.75 still remains our key line in the sand above. We can get above that, a push into the 70s, and more likely up into prior microcomposite up here that has the VPOC at 85.75. So hypos are going to be difficult today because they're going to be based on news. Obviously, we're seeing some weakness. It looks like we're going to put in a new low on the night. Did we just put in a new low? Yes, we just went down to 35 and a quarter, testing the week open, or the week low, I should say. Our week low is at 35. So we've got 15 minutes. We're likely to chop around in here, challenge the 38, take out the overnight low. I'm looking for a move up. Hypo 1 is a move up to challenge the range, possibly get up into the 40-50, chop around in this area, and then fall out of balance and come down towards this 29.27, possibly even 24.75, and then chop around in this area until the news. And once the news hits, if it's good, possibly a pop right back up into balance and into that 40-50, and possibly get a move up through the 47 and 51 and chop around in this area. So Hypo 1 is open auction, just inside a range or just outside a range, but outside of value. Failure somewhere between 38 and 43, and then a move down into the 29, chopping around in here, possibly down to 24. And then based on the news, if we get bad news, a move down further in testing that 16, or good news, a move back up into the 40-50 area, possibly even a push up into the 47-51 area. That's Hypo 1. Hypo 2 is an open auction in range, come down, challenge the 31, find responsive buyers, move back up in through the lower distribution and chop around in this area, taking out the 47 and 51, and waiting on the FOMC news, and then based on the news, a drop down through to the 27-24 area, or a pop up through and into the 56 and back up into the 61.50 area and chop around in there. That's Hypo 2. Hypo 3 is we chop around in a very tight range, somewhere between 35 and 42 into the news, and then based on the news, we good news, we pop up into the 61, possibly even up testing this 69 and taking out that 71. Bad news, a move down through to 24 and coming down and testing the 16. It's hard to give you a full day hypothesis based on the fact that we've got crude news and we've got FOMC. So it all, when you have news based day, it can revalue the market very quickly, and it's hard just to give you a plain hypothesis. So use the levels, trade the levels one level at a time, and don't get biased in either direction today, because I think we could see some heavy rotations. Even once the news comes, we could see a move in both directions. They're going to battle this year open in the morning, so I'm expecting a lot of chop in this area. The Keltner, we're sitting right on the lower line right now. A move back up to the center line is going to take us up into that 42 and a quarter, 42.50, and move up into the upper Keltner is going to take us up to 48.75. Quick look at gold. Gold, same thing. There's no edge right here. I mean, I've been taking a gold trade for days now because on the bigger picture, there's no real edge, and it's just been as whippy as the ES, and certainly not a good trading environment for gold. But key levels, today is going to be 64.60. Below that, look for the 55 to 52 level. Above the 75 level, more chop, but I'd be looking for a move up into the 83. Gold's not a thing you want to be trading right now. It's just very whippy, and regular setups are not working. Same thing with the ES. So, the double Reiko reversal setups have dropped off because of the whippiness right now. So just like anything, some setups, take a back seat to the market until the market gets back to normal. Anyway, we've got to move back up into the 37.50. I got taken out of my long at 36.75 my Theo, so I'm flat again. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.